Hello friends, this is Sahas Academy. We are presenting global and India-centric news and events. This video is a part of India market macro analysis. So, let's begin. This week's theme is Reserve Bank of India's Monetary Policy Committee decision, so let's start. RBI's Monetary Policy Committee has decided unanimously to keep the policy rates unchanged, with this repo rates unchanged at 6.5%, SDF at 6.25%, and MSF at 6.75%. Further, the MPC has also decided to continue to maintain stance of withdrawal of accommodation with a vote of 5 to 1 to ensure that inflation progressively aligns with the target while supporting growth. RBI governor insisted that headline inflation is projected at 5.1% in 2023 to 2024, which is lower from its level in 2022 to 2023 but would still be above the target of 4%, warranting continuous vigil. Hence, any future decision will be data dependent. CPI inflation projections are lowered at 5.1% for 2023 to 2024 from April's forecast of 5.2%, with Q1 at 4.6%, Q2 at 5.2%, Q3 at 5.4%, and Q4 at 5.2%, with risk evenly balanced. As per RBI, the progress of the southwest monsoon is critical for the inflation projections. Consumer confidence is improving, and businesses remain optimistic about the future. The cumulative rate hike of 250 basis points undertaken by the MPC is transmitting through the economy, and its fuller impact should keep inflationary pressures contained in the coming months. Real GDP growth for 2023 to 2024 is projected at 6.5%, with Q1 at 8.0%, Q2 at 6.5%, Q3 at 6.0%, and Q4 at 5.7%, with risks evenly balanced. As per RBI, domestic demand conditions remain supportive of growth on the back of improving household consumption and investment activity. Urban demand remains resilient, with indicators such as passenger vehicle sales, domestic air passenger traffic, and credit cards outstanding posting double-digit expansion on a year-on-year basis in April. Rural demand is also on a revival path. The higher Rabi crop production in 2022 to 2023, the expected normal monsoon, and the sustained buoyancy in services should support private consumption and overall economic activity in the current year. The government's thrust on capital expenditure, moderation in commodity prices, and robust credit growth are expected to nurture investment activity. Weak external demand, geoeconomic fragmentation, and protracted geopolitical tensions, however, pose risks to the outlook. The surplus liquidity in the banking system on the back of government spending, FX flows, 2000 rupees note bank, and transfer of dividend by RBI to government refrained RBI from change in stance. We expect RBI to maintain long pause in policy rates. Now, let's move to next section, global events and news. There is a strong expectation that Fed will keep interest rate on pause. Despite strong US non-farm payroll data that rose to 339K in May from 249K in the previous month, rise in unemployment rate that rose to 3.7% in May from 3.4% in the previous month put a lid to any rate hike expectation. These may be initial indication of cooling of job market. Further, a jump in US jobless claims for week ended 3 June 2023 to the highest since October 2021 suggests the labor market is supporting initial sign of cooling job market. CPI data is important for the Fed to decide further course of action on rate fronts. CPI data is expected to show soft print due to low crude and commodity prices. However, Core CPI is expected to see some spike due to large sale volume seen in used car market. Sticky core inflation warrants some rate action from the Fed to tame inflation. However, cooling job market and weak data from ISM manufacturing and services will put the Fed on wait and watch. Reserve Bank of Australia surprised the market by raising policy rates by 25 basis points to 4.1% and indicated that there would be more tightening needed to bring the inflation down to target levels. However, future rate action will be data dependent by assessing how the economy and inflation evolves. Meanwhile, Australia's GDP growth slowed to 1.5-year low of 0.2% quarter-on-quarter in the first quarter of 2023 versus estimated number of 0.3% and 0.5% in the previous quarter. Central Bank of Canada has also surprised the market by raising its key policy rates by 25 basis points to 4.75%. The decision was taken in the view to tame sticky inflation. Canadian Central Bank was on pause since January. The BOC said strong consumer spending, a rebound in demand for services, a pickup in housing activity, and a tight labor market contributed to its decision. The surprise rate hike by Canadian and Australian central banks has raised concern in the market that rate hike cycle is not yet over, though there is a pause. Similarly, Fed is expected to be on pause, but market expects if this time there is pause, then in the next meeting of July definitely there will be a rate hike. In Europe as well as in UK, services activity is seeing moderation, with market PMI index declining. As per European Central Bank Governing Council members, further interest rate increases are necessary to curb persistent inflation pressures across Europe, though the rapid decline in energy costs should help to tame inflation in Europe. There will also be a cooling in the increase in core inflation, which reflects the reduction in the cost of energy. The ECB president has acknowledged that the headline inflation is falling, but there is no clear evidence that underlying inflation has peaked. Slowdown in manufacturing sector in China that was indicated by soft producer price index in May, which came lower at 4.6% as reported by National Bureau of Statistics. Recent data points indicating slowdown in economic activities with weakening exports, imports, and factory activities. In the month of May, the China's export fallen by -7.5% year-on-year from the previous month's number of +8.5% year-on-year. On the contrary, China's imports declined by 4.5% year-on-year, better than the consensus expectation of a -8% contraction and a marked improvement on the -7.9% fall registered in April. CPI data also came at 0.2%, lower than market expectations of 0.3%. Core inflation slowed to 0.6% from 0.7% in the previous month. This is fueling market rumors of fiscal stimulus to support growth. However, Caixin China PMI services rose to 57.1 in May from 56.4 in the previous month. Japan's GDP in first quarter of 2023 was revised sharply up to 2.7% from the preliminary estimates of 1.6% and market consensus 1.9%. This was on the back of capital expenditure and continued growth in private consumption. Capital expenditure increased by 1.4% in the first quarter of 2023, up from the earlier estimate of 0.9%. Though private consumption saw a modest decline from the previous estimate's 0.6% to 0.5%, it continued to grow for the fourth straight quarter. Zibun Bank Japan PMI services rose to 55.9 in May from 55.4 in the previous month. The World Bank expects global growth to slow significantly in the coming months amid high inflation, tight monetary policy, and more restrictive credit conditions. It expects global growth of 2.1% this year, down from 3.1% in 2022. It is an upward revision from a 1.7% forecast issued in January. On the other hand, OECD predicted global economy likely to expand by 2.7% in 2023, a slight increase from its previous projection of 2.6%. Growth expected to accelerate to 2.9% in 2024, unchanged from the OECD's March forecast. Now let's move to our next section, India news and events. As per data published by Ministry of Rural Development, demand for rural jobs scheme increased in May. The households applying for work in the May was 31.7 million versus 22.3 million getting work. EV bill collection for May increased to 88.2 million, suggesting a higher GST collection in June. This data is also supported by previous week's PMI data that rose to 58.7 in May from the 57.2 in the previous month. This indicates strong industrial activities in the country. The World Bank retains its April forecasts for India's GDP growth at 6.3% for financial year 2024. It is expecting India's GDP to grow by 6.4% in financial year 2025 and pegs India to remain the fastest growing major economy in the world. India's services continue to be in expansionary phase as indicated by S&P Global India Services PMI Business Activity Index. The index rose to 61.2 in the month of May from 62.0 in the month of April. Here we wrap our discussion. Thank you for watching the video. If you have any suggestion or feedback, you can reach us at info@sahasacademy.com or visit our website www.sahasacademy.com. You can also reach us through social media platform LinkedIn, Facebook, Twitter, and Instagram. To encourage us to share more videos, please subscribe to our channel. Thank you. Disclaimer: this video is made for educational purposes. It does not constitute an advice. Please consult with your investment advisor before taking any investment decision.